and investors. My name is Roger Scott, and today's Friday. It's August 6th. As you can see here, the market is very, very much random. The Dow's up only 33 points. The Nasdaq is down 16 points. That is a very, very random market where things are just all over the place and there's nothing above 85 or below 85 on the Dow. So you could see here, when you see a negative Nasdaq, positive Dow, and all the numbers are just slightly up or down, that is just a random market without any directional bias. And the reason we don't have directional bias is because we're waiting for a major report from the Fed. The report that we're waiting for today is the employment situation, where we are expecting, I think the number is about 800,000, 850,000. Let's see what the expectation is. Oh, the expectation is 900,000. And here's where the wrinkle lies. If you look, and unemployment rate is expected to be at 5.7%. And the problem here is, if you look at the ADP report, the private report that came out on Wednesday, the expectation was, I think, like 700,000, and it came in at 330,000. So if today's report is a reflection of what we saw on Wednesday, and I hope it's not, we're going to be in deep, deep, deep doo-doo. So pay attention to today's report because everybody's looking at it because it's really, really instrumental in light of what we saw on Wednesday. But again, ADP is a private report. This is one from the Fed. So let's make sure that we keep an eye on it. In terms of the bond market is down. It's at 149.15. It's already gapped down. And today's report is going to be very, very instrumental. If the Fed shows that the economy is in fact slowing down, and there's only 300 and something or 400,000 people on the labor force, it's going to cause a big impact on the bond market. If that's the case, then the economy is not speeding up, right? It's slowing down. And if it's slowing down, they need to add more bond purchases. But if not, if the number is solid, then the economy is heating up really well, and that there's a good chance that they'll slow down their bond purchases as they said they would, and it would cause the bond market to reflect downwards, which would mean higher interest rates. I'm betting that bonds are going to break the 200-day line and come back down below. That's my bet. If you believe that interest rates are going to go higher, or the Fed is going to keep maintaining these bond purchases for the next 2-3 years, then you may disagree with me, but that's my 5 cents. Now let's talk about global economy, and I'll get into the hot stocks and talk about the big stuff. Now, a lot of what I just talked about, I'm going to reflect upon again, but this is what's going on right now. Investors are awaiting July unemployment data, and it'll give you a good kind of a perspective based on what they're writing and what I'm saying. So I'm trying to get you guys to get into the dynamics of the market. Investors awaited July unemployment dates for signs of how renewed anti-disease curbs might affect hiring and wages. They were encouraged Thursday by a decline in unemployment claims. Fingers crossed. Forecasts expect the U.S. economy, which is down about 6 million jobs from pre-pandemic levels, to have added about 900,000 jobs, improvement over 850,000 in June. I hope that's the case. That would lend support to Federal Reserve Board members who want to wind down stimulus through bond purchases that inject money to the financial system, which is what I was just talking about using the bond example. Another major factor is COVID, which is not really talked about in this report. I don't know why. It is becoming a major factor. They're saying things in the country may be getting worse, and you may want to keep your eye on the stay-at-home stocks. In terms of the stock market sectors, we still have a lot of randomness and fragmentation. Let me show you. Technology is up here. Consumer discretionary is down here. Shouldn't be the case. Should not be the case. They're best friends. They're next to each other. And communication services should be next to consumer discretionary too. Industrial should be next to basic materials. They shouldn't be this far apart. And typically, usually, not always, but typically when markets get fragmented like this, they need to cool off. And I'm telling you right now, based on what I was telling you yesterday and last few weeks, look at the overall market right now. It doesn't look anything like the broad market. This is the equal weighted stock market. This is the one that has equal weight. Look at price action over the last 6 months. Flat. Now look at SPY. Looks like this. It looks trendy. But if you take away all those the Amazons, the Apple, the Facebook, the Netflix, This would be right down here, just like these are the two same indexes, but one is equal weighted, one is capitalized weighted, and they're typically not this far apart from each other, but right now they are. So be very, very careful until we get this fragmentation out of the way with a good pullback, which would make the large cap stocks and the smaller stocks pretty much equally weighted in terms of the momentum levels. We're going to see a fragmented market. We need a cool off. But in light of that, I've got 3 stocks that just pulled back pretty hard that may be ripe for opportunities. First one, Roku. Made a swing high. Remember, Roku was a top stay-at-home stock. There's a reason why it just rallied hard. COVID. Just gapped a little gap down to the 50-day line, and I think we're going to pull back up. Really good time to buy an option here because calls are very deflated around the 50-day moving average when you've been going down for 6-7 days in a row. So even if you buy a call here, and if we just open up one day, that call can literally go up 30-40%. So I think we're going to go higher from here. If you're trading stocks, you may want to wait for this to trade above the 50-day line, but if you're buying an option, this is probably a great time to buy an option. And if it breaks lower to the 200-day, you just liquidate it, and if it breaks higher, you're good to go. So Roku's a good stock. It's a stay-at-home stock. Then we have APTV. Also gap down to the 50-day line. RSI is in the toilet. Really, really good. Just made a swing high. And if you look at what this stock does, it's a service technology, motor vehicle parts. Motor vehicles, folks, 90%. People can't use car sales, motor vehicles, they're going crazy right now. Anything with a motor in it is going crazy. And if you look at what the stock does, manufactures vehicle components and provides electrical, electronic, and active safety technologies. Folks, cars are getting more advanced. It takes over 1,000 chips to make one car. Hot stock, swing high, not going to be impacted by COVID. And then Globus Medical, also almost at the 50-day high, but bounced back hard, made a swing high. And if you look at what they do, they are medical instruments, 57% return. Look at the revenue. Everything is solid on this stock. Earnings per share growth versus previous year, 68%. And most importantly, technically, the stock looks really, 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 really solid. I'm liking this stock quite a bit. So GMed, take a look at it. GMed, APTV, and Roku. And before you go, I've got something really important for you. Imagine having access to a secret calendar that identifies stocks that consistently moved higher in the same time frame every year for the past 10 years. Now, it's hard to believe something like this could even exist. And this is why people keep it secret. No one knows about it. Thanks to this calendar, it doesn't matter if a stock has been struggling or if market conditions are terrible. When the dates roll around, these stocks generally go up. All a trader needs to do is know when a stock will skyrocket, and they have the potential to unlock consistent winners all year long. Legendary trader Tom Busby's proprietary dashboard alerts him when a stock enters a prime window and when it's approaching, and he wants to give everybody access to it, everyday traders just like you. Click on the link below to unlock this little-known strategy now. You're going to get a lot of value. Just by learning about it, you're going to get names of 10 stocks that have been going up every year for a decade. You do not want to miss out. Most importantly, make sure to like this video, subscribe to this channel if you're watching on YouTube. Folks, stay ahead of the market by being the first to be notified when I post my next video. Don't you want to see good stuff like this before the opening bell? Watch out for that employment report, and I'll see you on Monday. Have a great weekend. Bye.